We have absolutely no idea to the extent of the tariffs. We do recall 8 years ago, President Trump in his first term promised sweeping tariffs, and we did institute tariffs, but they were nowhere near as high as he had threatened them to be. He's also gotten a lot of pushback from corporate America to be very careful about applying tariffs. And we must remember that no president in our history is so tied to the stock market as Donald Trump, who measures his own success by how well the stock market does. So my feeling is that the tariffs will not be anywhere as large as the market fears. And I myself and many others really cannot place them into a forecast until we find out what the policy is going to be. But there is no doubt we are in a very strong economy. Both the third and fourth quarter are very close to 3% real GDP growth. We have very good momentum moving into 2025.
Do you worry about the economy overheating?
I worry a bit about the stock market overheating. This latest run, as I mentioned, particularly of the tech stocks and the Mag 7, I think was abetted by momentum players that were just running up the stock and holding on. And as soon as those trend lines were broken shortly after 2 p.m. Eastern time today, when the Fed made their announcement, they all began to jump off that train. And we saw some very, very big declines. I mean, Tesla, of course, was the one that was the most hyped up. It almost declined 10%. It might certainly bounce back. But I think it was not a healthy rise in the last week or 2 weeks. And I think that this actually does bring some healthy reality back to the markets.
Yeah, it's interesting you said that, Jeremy. Getting back to the tariffs, I suppose that is one to watch as far as the size is concerned, given some of the sort of magnanimous remarks coming from Trump regarding Xi Jinping earlier this week. But you talk about the strength of the economy, and then you also talk about the reality check for the markets. I mean, there is this view out there that perhaps this was a bit of a reluctant reduction in order to give the markets some comfort so that the Fed could lay the path for a sort of more hawkish or uncertain sort of tone into 2025. But given the Fed sort of gave the markets what they had been expecting, and yet we still saw disappointment, what does that tell you about the reaction function moving forward?
Well, everyone was sure of the 25 basis point cut. Chairman Powell has been making it a policy that if he does not go, if he feels the market is wrong within a week or 10 days or 2 weeks of the decision, he makes an announcement to straighten the market. So by not pushing back against the almost universal expectation of 25 basis point cut, he was completing the 1 percentage point cut that they had planned for this year, 50 in September, 25 November, and now this 25. But we know that the neutral rate, that so-called R star, that elusive R star, what rate is the economy in balance? It is certainly much higher than most economists, including the Fed, had thought it was in the middle of last year, or in the middle of the end of this year. My feeling is actually that the neutral rate of interest is somewhere between 3.5% and 4%. With today's move, we're down to 4.33%. So we are still maybe 50 basis points above it, restrictive. But as Chairman Powell, using his words, we have gone a long way back towards a neutral policy.